Hi guys, right, so like I said, I'm going to do a crypto analysis every day just to look at the things that we've learned, the instruments that we've learned over the last week, specifically Bollinger, and specifically stochastic formations, support resistance lines. Guys, I also noticed that some of those videos have been only viewed once or twice, so please make sure that everybody is up to date with the videos. Senseless for you guys to, if you don't follow and if you don't get up to date with the content. I want to start with more stuff next week, specifically one of the strategies. And if those things has not been absorbed the information, and if you haven't played with it, like added it to and asked your questions, then you're gonna start lagging behind. It's crucially important for you to be up to date. Right. So we were looking at Ethereum, and we said Ethereum had this nice little swings going up to a bull run. It hit a support level or resistance level, a very strong one. And on that resistance level, we looked at our Bollinger Bands, and we saw that it was a beautiful Bollinger Band setup, which indicated oversold, but also a loss of momentum. We know it was echoed in the stochastic being also oversold, but most importantly, a divergence, which indicated a reduction in momentum and speed. And we know that the stochastic indicates that reduction in speed. It's a pre-price behavior. In other words, you can see the behavior in speed and momentum change already in the stochastic, because the high of the price and the next high, the stochastic did not make a next high. All right, the stochastic doesn't make a next high. That means there's a divergence. In other words, that's a high, that's a low, while that swing has got a high, and then that's a high. So the price is still increasing, but the speed and momentum is decreasing, which indicated for us, like, all right, we've got a resistance line plus those information indicators. This is about time for us to exit this long trade if you were in that long trade. Then the question was, but all right, where would you now enter? Is this just a complete reversal? No. Remember, these indications can mean two things. It can mean that the market is going to rest, in other words, move sideways before it hammers through that resistance line and the bull trend continues, or it can mean that this is a place where the market is going to turn. A lot of times, a setup like this means that the trend is going to retrace before it runs off. But how we would have traded this is because we would have, let's say, be in here from somewhere in the bottom, and this was such a strong signal, I as a trader would have either half my position or closed my position completely, take the easy money off the table, and then you wait for a setup, either a setup that's going to get you to enter the market going down if there would be a downtrend, or a setup that would have been getting you back into the trade going up. And true as Bob, what has happened? Market moved down. It clipped this support line over there, went up, so it formed a beautiful triangle, conversion funnel as I like to call them, and it broke out of the support line of that conversion funnel, hammered down, and basically came down to this support level down here, that yellow one. So you can see it was tested there, and it was tested there as well. So it's been tested twice. Remember, a support line, the moment it has been tested twice, it qualifies as a support resistance line. Obviously, we want more. The more times it's tested, the more authority it has. It's actually been tested on that long candle there as well. So the question now is, all right, so we would have entered the trade on that breakout. And if we look at the daily setup, this little downtrend is still intact, besides that it bounced off that level. Now, if we look at our Fibonacci, let's go and have a look at Fibonacci, because that trend is now retracing. So this swing is retracing. See how far it has retraced. So we're currently sitting at 38%. All right, there's the 38% level. It can go as far as that yellow line up there if we take the Fibonacci measurement. But let's go and have a look at our other time frames. Let's go and have a look at our 4-hour. What's going on? Okay. So on our 4-hour, we can see the following. So we're in this trade, came down to the bottom, and we saw it's outside the Bollinger, made a little pullback, and then inside the Bollinger with a pierce. So a pretty much oversold kind of like signal that Bollinger is giving us. What we also see is that there is divergence on stochastic. So market came down, didn't make a swing here, but the stochastic made a new low, then pulled back, and then on this pullback and swing, we see that stochastic is continuously making a new, not a new low, but price movement did make a low. So there's divergence. So if we can try to draw a line like that, because why? Price movement is in that direction, and then if we draw a line here on stochastic, there's a divergence in the stochastic, plus a setup on the Bollinger Band, which speaks what? It's an early indication that this move has lost momentum and speed. And we saw that move also. I think we hit a support line. We did say we hit the support line. Yeah. So we hit this range of the support line here, right? So if we zoom out a bit, let me go insert something here. A rectangle. So this is the support area. Okay, that's been tested before. Right, so market hammered down to that and then bounced off. Okay, if we look at our 4-hour chart, we see that there was divergence and a Bollinger setup. Now guys, what's important here is that you notice the following, that inside a trend is a trend. In other words, inside a time frame is another time frame, and inside that time, so we can zoom out to smaller time frames. And what's important is that a lot of times your smaller time frame gives you a early signal. So you haven't seen anything that spells out reversal or any form or anything in this trade. But the question would have been is where do we enter, where is target, and when to exit or re-enter. And remember, we spoke about easy money. The trick is not to make money. The trick is to manage your risk and keep your money. So specifically in a formation like this, where you had a beautiful triangle and break, that was easy money. But now you get to the end of this run, and it starts pulling back and starts eating your profits again. Then on this daily, what do? Do you stay until it's 61%, potentially have taken all your money, and then continue running on this bull trend? Or will it turn around? It's all about managing that risk. The risk of, all right, we took easy money off the table. Now, what do we do now? And that's what your smaller time frames does for you. So if you go down to 4-hour, what did the 4-hour chart do? The 4-hour reflected the exact same breakout, came down, but then information the 4-hour gave us, which the daily did not give us, was a Bollinger, was a stochastic, was a divergence on the support level, which then told us what? It told us on this candle, on this low here, when it made that swing up with this candle, and that's a bullish engulfing. We haven't done candles yet, but that would have been the 4th signal. It would have told us to lighten our loads. Now, the important thing, obviously, as well, is not just that. We had a target of 17% to 114. So we go from there down to there. Exactly 114 points. The exact target of that triangle has been reached. Which in any case was the signal that you should take your profits and leave, because the strategy around a triangle is you enter when it breaks, and the target is the distance of the entry gap of the triangle. So this in any case was time to exit. But what it also on the 4 hour did was it was echoed by 2 other indicators. So once again, just so that you can see how the Bollinger, how stochastic, and how divergence are implemented, and how it works within the different time frames and within the strategies. Let's have a look at what a 1 hour did, which will have the same message. So if you were trading on the 1 hour level, would have been in there. That's a little flag pattern. You would have, if you exited there, you could either, if you weren't in this trade, this would have been an area to enter. Very late, I wouldn't have done it myself, but it would have been an area to enter. They made another little flag. A lot of times with a lot of traders as well, those is they will add to their position. So if they entered there, they came to a position that have consolidation or a strong formation, they would re-enter another formation. So they will add, so they grow their position like that. But the same message, once again, from here up to this point, you see massive divergence on the hour, and so it will go for all the time frames. So please have a look at the Bollinger Bands, stochastics, divergences, and the question obviously now is, what would we do now with Ethereum? Well, you should be out of the trade. You've made your money, it's off the table, and now you wait. Remember, the secret of success, the secret sauce: knowledge, awareness, patience, and precision. So our knowledge was about the divergence that told this bull trend that it was over, the triangle that got us into the bear trend, the distance of the triangle that gave us a target, and then divergences that told us that this trend is over. All right, this little one there. So what we are waiting for now is not, we sit on our hands, we have our knowledge, we have our awareness, we are aware of what's happening, and we are waiting, patience, for a setup. So this needs to form a setup, either a new triangle or something to tell us where is the market going. Is the market going up? Is the market going down? Because at this moment, the market is an indecision. That means nothing. It's not new highs, it's not new lows, it's long-tailed candles, it's all over the place. So the market is literally sitting there making a decision. Let's have a look at BTC, Bitcoin, Bitcoin dollar. Yeah, pretty much same things happening there. Had that run, pullback. Most of our cryptocurrencies we see is in the same trend direction. So the sector in itself is trading in the same direction. So had a bull, has got a bear. So on different currencies, you obviously will have different setups. So we had this bull setup, we had divergence there, as you can see, divergence. You had a beautiful Bollinger setup where the Bollinger was outside and then failed. If we had candles now, you will see that's engulfing or even a hanging man. It ran down. No setup on the daily to enter. Let's see if we would have had a setup on the 4 hour to enter. So no beautiful triangle. We had, yeah, I will have to go one level down. Let's go to 1 hour and see if we would have had a setup on 1 hour that would have gotten us in that run, in that trade. So that was at the peak of it. It's where the divergences happened. So what you had here, obviously, on the 1 hour level is you had flag patterns that would have gotten you. So pretty noisy on Bitcoin, on the lower levels to have gotten you in that trade. Not as clean cut as Ethereum. Ethereum, we had the beautiful setup of the triangle that got us into that 4 hour chart frame, or even in the 1 hour if you wanted to trade the 1 hour. And then a beautiful setup to get us out. So what I'm saying is, you're not always going to trade each and every instrument within a sector. So if you have a banking sector, you're not going to trade each bank. Number one, you won't have enough funds to trade each of the trades, because you can only expose, when we get to money management, you can only expose X percentage of risk on a specific sector, because sectors move in the same direction. So let's say you've traded Ethereum, Bitcoin, Tron, and whatever, and the whole sector is moving in the same direction. So you take positions on all of them, and then the sector moves in the opposite direction. That means, let's say you've got 5 positions, and it's then going to move against you, but on 5 different areas. At a 2% risk, you wipe out 10% of your account on essentially one trade, because you are trading a sector that's in sync, that's moving in the same direction. We will talk more about that when we get to money management, etc. All right, guys, that is it. I'll speak to you guys again on Monday.